Bitcoin just saw one of its biggest pullbacks in months, and everyone's wondering, is this the start of a deeper correction, or just a much-needed reset before the next leg up? Let's break down what really happened over the past 2 days, and why Binance might have made things even worse. First off, this wasn't just random selling. It started with a major macro shock. The US dropped a surprise 100% tariff on Chinese tech imports, basically throwing a grenade into global markets. When that kind of news hits, investors rush to cash or the dollar, and risk assets, like crypto, take the hit first. And because this happened after US hours, liquidity was thin. That means every sell order cuts deeper. Then came the cascade of liquidations. Crypto traders love leverage, but when price moves against them, it snowballs fast. Stop losses trigger, margin calls hit, and before you know it, billions in long positions get wiped out in minutes. Binance even confirmed it was one of the biggest liquidation events in history. That's how fast sentiment can flip in this market. Now let's talk about Binance, because yeah, it played a big part. During the crash, users reported frozen orders and failed transactions, meaning some couldn't close positions when they needed to most. That made the drop even more violent. And since Binance provides liquidity to other exchanges, those problems ripple across the entire market. To their credit, Binance said they'll compensate affected users, but the damage was already done. So did Binance cause the crash? Not directly, but did it amplify it? Absolutely. Now, where does that leave us technically? Bitcoin is sitting around the $110,000 range, and the key support zone to watch is $100,000 to $105,000. If we lose that, we could see another flush lower. On the upside, any bounce that retakes $115,000 to $118,000 would show buyers are stepping back in. The 50-week moving average, a long-term strength indicator, is sitting roughly around $95,000, which has historically been a strong bounce zone during bull markets. Here's what I'm watching next. Deeper downside. If panic continues and we break below 100K, expect a sharper move lower before stabilization. Relief rally. If buyers step in, we could see a short-term bounce back toward 115K plus. Sideways chop. Markets could consolidate for weeks while traders reset and open interest cools off. Remember, volatility is the cost of admission in crypto. Sharp pullbacks are normal in bull markets. What matters is how strong the recovery looks once the dust settles. So keep an eye on support zones, funding rates, and ETF inflows. That's where the clues for the next move will show up first. If you're new to trading, don't panic, sell in the red, and don't FOMO in the green. Plan your entries, manage risk, and zoom out. Bitcoin's long-term trend is still intact. This is CT Honeybadger always, reminding you volatility is opportunity if you know how to ride it. Hit like, subscribe, and drop your thoughts below. Do you think this was just a healthy correction or the start of something bigger?